Hi, everyone. I think I'm going to go ahead and get started. I see a couple people are still joining us, but I do have a lot to go over today, and we are recording this, so you will have access to the training after we're all done. So welcome to day 2 of resource management training. Again, my name is Denise Hignite. I am the resource management director at Sand Resource. And today we are going to be going over allowable costs. And we're spending a whole hour on allowable costs because this is a very critical topic. During a USDA administrative review, I would say this is one of the most common findings that we find during a resource management review. And it's on the more serious side because if there are unallowable costs charged to the food service program as part of the corrective action response, the SFA is required to repay the food service program for the unallowable costs that have been found. So it does require a transfer of funds. And if you can avoid that, that's what we're looking for, right? So today we're going to go over how to identify unallowable costs using cost principles, unallowable cost examples. So I'm going to talk about some common unallowable costs. Then we're going to take a look at some hot topic issues. Okay, so rent, utilities, and then split time employees. These are the questions these are the topics for which I get questions the most often. And then our last section is going to be covering indirect costs and direct cost allocation. So what is an indirect cost versus a direct cost? Which one should you choose in terms of applying cost to your program? So we'll take a look at that. I'm going to jump right in. So cost principles are covered in 2 CFR 200 subpart E. So again, this applies to all federal awards. It is not specific to the school food service program. Okay. Costs must meet the following general criteria in order to be allowable under federal awards. The cost must be necessary and reasonable for the performance of the federal award and be allocable thereto under these principles. Conform to any limitations or exclusions set forth in these principles or in the federal award. Be consistent with policies and procedures that apply uniformly to both federally financed and other activities of the non-federal entity. Be accorded consistent treatment, so a cost cannot be assigned to a federal award as a direct cost if any other cost incurred for the same purpose in like circumstances has been allocated to the federal award as an indirect cost. The cost must be determined in accordance with the generally accepted accounting principles, which we call GAAP, except for state and local governments and Indian tribes only as otherwise provided for in this part. Not be included as a cost or used to meet cost sharing or matching requirements of any federally financed program. Be adequately documented, and the cost must be incurred during the approved budget period. Okay, so let's just kind of rehash that. I've kind of paraphrased all of them into these very simple terms. Okay, cost principles, we're looking at necessary and reasonable, allocable, legal, consistently treated, in accordance with US GAAP, and adequately documented. Those are like the main things we need to think about when we're trying to determine is a cost allowable. Okay, so necessary costs. What does it mean to be necessary? I feel like this is fairly straightforward. Are the costs ordinary and necessary to operate the program? So for school food service, we're talking food purchases, cooks and the food service director's payroll expenses, cafeteria supplies and equipment. So keep in mind, there could not be a school food service program. You could not run that national school lunch program without food, labor, and supplies. Okay. Reasonable costs. So if a reasonable cost is, if in its nature and amount, it does not exceed that which would be incurred by a prudent person. So we call this the prudent person test. The prudent person test is, does it meet sound business practices, arm's length transactions, fair market price? The question of reasonableness is particularly important when the SFA is predominantly federally funded. Okay, so in determining reasonableness of a given cost, consideration must be given to the prudent person test. Okay, so is prudence or caution used when deciding to charge the cost to the federal award program, so to the food service program? And are the costs consistent with the SFA's policies and procedures? Okay, so some tips here would be to think, could you defend these costs to the taxpayers, to the media, to your auditors? And if the question is, maybe it's questionable and maybe not, then you probably should not charge it to the food service account. So examples would be like food service clerk, consultant services, point of sale software. all of those costs are reasonable costs for the program, right? No taxpayer would say you shouldn't have a point of sale software. Technically, you don't have to have point of sale software. There are plenty of SFAs that do use manual meal count sheets, but it improves your program, right? The accuracy of your meal counting if you have a point of sale software system. So that would be a reasonable cost. Allocable costs. So we're talking a cost is allocable to the food service account if the goods services are assignable to the cost objective in proportion to the relative benefits received. Okay, so food that is used to make reimbursable meals is 100% assignable to the food service cost objective. You purchase that food to make reimbursable meals. So it is 100% allocable to food service. So it's important to keep in mind that a cost could be reasonable, it could be necessary, but it might not be allocable, therefore it's not allowable. Okay, so this is an important concept to understand. An example would be utility costs. Okay, utilities are absolutely incurred when you operate a school food service program, right? You've got electricity, you've got water, you've got heating. But if the SFA cannot determine the benefit received by the National School Lunch Program, then it's an unallowable food service cost. Okay, so you cannot charge that cost to the food service program. Now, there are some ways to recover utility costs. We'll talk about that later. But in general, if you cannot determine the benefit received by NSLP, do not charge it to food service because it is not allocable. Okay. So there's a direct cost allocation principle that's explained in the federal guidance. It says if a cost benefits two or more projects in proportions that can be determined without undue effort or cost, the cost must be allocated to the projects based on the proportional benefit. So there's this concept of proportional benefit. Okay. Let's say a bookkeeper spends 3 hours per week accounting for food service out of their normal 30-hour work week. Let's say they only work 30 hours. If they have time studies or timesheets to support those 3 hours worked for food service and those 30 hours worked total, then we can say that 10% of their salary is allocable to the food service account. Okay. So that's based on proportional benefit. Food service received 3 hours of the bookkeeper's time during the week, and the general fund received the other hours, okay, the other 27. So if a cost benefits two or more projects or activities in proportions that cannot be determined because of the interrelationship of the work involved, then the cost may be allocated or transferred to benefited projects on any reasonable documented basis. So we'll explain what that means later. At first, it kind of sounds like, oh, you can just use any method you want to allocate these costs if it's too difficult to figure out exactly how much food service incurred. That's not exactly true. There are further restrictions. Okay, so just keep in mind that we're looking for a reasonable documented basis to allocate costs between two cost objectives. Okay, and we'll get into this. It's basically the concept of a cost driver. Okay. Legal and compliant. So a cost must meet all legal requirements at the federal, state, and local levels. And then it also must meet all program requirements. Okay, so it needs to be compliant with the National School Lunch Program. So an example would be if a contract is improperly procured, then that cost is unallowable. Okay, so and food service may be required to repay the entire cost of that contract. So obviously that can be very serious if we're talking about a food service management company contract where that was the majority of the expenses incurred for the year. Okay, we're also talking about like smart snack compliance, so making sure that you're only purchasing food that meets smart snack compliance. And then bad debt expense would be an example of an expense that is explicitly prohibited in regulations. And so that absolutely cannot be charged to the food service program, can't be charged to any federal award. So hopefully legality is a fairly easy concept to understand. You know, you can't charge bribes to food service. You can't charge alcoholic beverages. I have seen this. I haven't seen bribes. I haven't seen political lobbying costs. I have seen some wage issues. But I have definitely seen alcoholic beverages being purchased with food service funds, which is a big no-no. So just keep in mind legality when costs are being charged to food service. Consistency. So a cost is consistently treated within an SFA's policies and procedures. So if your SFA's accounting handbook explains how payroll will be allocated or how travel expenses, maybe per diem for travel, those costs for food service need to match your school's policy as well. Okay, so you can't choose to use a different methodology to allocate costs to food service than what's being used for other departments or programs. The idea here is that food service cannot be singled out. So as a food service director, if you catch wind that they're coming after food service because maybe food service has money and they're attempting to charge costs to food service that they are not recovering from other federal awards or other projects at the SFA, then this can be an issue of consistency. Costs must also be consistently treated as direct or indirect. We will be talking at the end of this presentation about direct versus indirect, but the concept is you cannot charge one cost directly if it's treated as an indirect cost by another department or program or fund. Okay. So an example here, facilities and administrative costs, we call those F&A costs. Those are normally classified as indirect. Okay, so if they're treated as indirect for all departments within SFA, except for food service, where food service is getting charged directly for, let's say, like a CEO or director of operations salary, then that can be an issue of consistency in how it's treated. Okay, US GAAP. So US GAAP is the generally accepted accounting principles. This refers to a common set of accounting rules, standards, and procedures that are issued by the Financial Accounting Standards Board, which we call FASB. GASB is responsible for issuing GAAP guidance to government entities. So if you're a school district, then you follow GASB. It's very similar. So from your perspective, it's all basically the same thing. It's government accounting standards, which is basically GAAP. GAAP requires accrual basis of accounting. So if you remember from our presentation on Tuesday, we talked about the different basis of accounting. GAAP requires accrual basis, but that doesn't mean that as an SFA, you're required to keep your ledger on an accrual basis. It just means that you do need to be able to provide accrual basis financial reports. Okay, so this can apply to all SFAs, including non-government entities that use the cash basis of accounting. As part of participating in a federal awards program like the National School Lunch Program, you need to be prepared to provide financial statements if requested on an accrual basis of accounting following GAAP. Okay. This shouldn't really impact the allowability of costs for food service that much, unless you are a large SFA and you have some kind of complex accounting topics that you are tackling within your ledger. For the most part, allowability doesn't change much when we're talking about normal food service purchases, the difference between cash accounting and accrual basis of accounting. So in terms of allowable costs, not a big difference. Okay, adequately documented. So first off, it needs to be recorded in your accounting ledger. If it's not recorded as a food service expense in your accounting ledger, then it wasn't adequately documented as a food service expense. So this is a common issue we do see where SFAs attempt to allocate costs to the food service program on the reporting side rather than in the ledger. So the ledger doesn't support the allocated costs that have been charged to food service. Okay, so part of being adequately documented is that the expense needs to be recorded in the accounting ledger for the school food service program. Okay, retaining documentation for 3 years. So 3 years financial records, your school or SFA may actually have a longer retention period. Some choose to keep documents for longer than 3 years. But this means all financial documentation. So we're talking about all source documentation that supports the expenses, vendor invoices, delivery receipts, purchase orders, vendor contracts, payroll summaries, timesheets, employee agreements, personnel activity reports, time studies, stipend agreements, mileage reimbursement forms, travel vouchers, employee refund forms, training agendas, allocation spreadsheets, square footage documentation, utility usage studies, indirect cost read agreements, and the calculations for those costs. And then on the deposit side, we're talking deposit slips, point of sale reports, cash receipts, claims system data, bank statements. Okay, so it's a lot of documentation, but if there are question costs, you need to be able to support them. So during a USDA administrative review, we look back at the most recently completed fiscal year. So really that's going back maybe at most 2 years, basically from where you're at currently. But we also have the authority to look back to the last audited school year. And if there's a question about how costs have been charged in the past, we may need to go beyond the review period. okay, to get an understanding of what has been happening in your program. So you should be prepared to provide documentation up to 3 years from the current date. All right, so let's go ahead and talk about some unallowable costs. We're going to first go over some just general guidance about unallowable costs. Then we're going to talk about specifics, land and construction of buildings, facilities repair and improvement, capitalized expenditures that have not been pre-approved, and bad debt expense. And then we're going to talk about non-reimbursable meals, because this is like a sneaky unallowable cost that a lot of SFAs don't really think about until potentially it's brought up during an administrative review. But it can have a big impact on food service, these non-reimbursable meals. Okay, so general guidance. LDOE, Town Nutrition Program, has a list of allowable and unallowable costs. It's a great starting point. It just explains some of the basics. So I have the link here. You can find it on the LDOE website. Unreasonable, unnecessary, just some general guidance examples would be like late fees or attempted service fees. I brought this one up specifically because we did see this quite a bit over the last couple of years. An occasional late fee on a vendor invoice payment, those will probably be overlooked during a USDA administrative review. But if we're seeing recurring late fees, attempted service fees on vendor invoices, then we are going to notice that there's been some financial mismanagement, right? Something's happened to where invoices are not getting paid on time, or there's been some sort of issue with the vendor with these attempted service fees, okay? So these can get written up as unreasonable and unnecessary costs. Okay, so just keeping in mind, if you are incurring those costs, then it may be better to separate those costs out and charge them to the general fund instead of food service, just to make sure that food service isn't charged for these questionable costs. Okay. Birthday cakes, candy, soda, coffee, or the staff break room. These are like miscellaneous food purchases that we often find when we are looking at allowable cost testing invoices. If we see items that are obviously not being served as part of a reimbursable meal, we will reach out and ask, like, what was the purpose of this? And a lot of times we do get back responses saying, oh, it's candy for a Halloween event for the school, or it's soda for a staff meeting, or it's coffee for the staff break room, birthday cakes for celebration for the students or for staff. So these are all not part of the National School Lunch Program, right? So they shouldn't be charged to food service. We understand if food service is the facilitator for some of these purchases because you are in contact with the vendors and you can make these purchases, but the costs need to be passed down to another department, okay? So coffee for the staff break room would be a good example. Business staff as well as food service staff should be trained to highlight those items on a purchase invoice. And when it's sent to the business office for payment, they need to be trained to separate out those costs and charge it to a different expense code that is not food service. Okay. Now, if it is coffee for the food service staff, that is an allowable employee like benefit, I guess you could say. But if it's coffee for the school staff in general, then it would not be allowable. Okay. And then any of these costs can be, I guess you could say, allowable as long as they're repaid to food service. So again, if food service facilitates the purchase and then is repaid as like a catering or vended meals, like that would be allowed. Holiday decorations for the cafeteria. So this can be a gray area. I've seen a lot of differing opinions on decorations. In general, decorations that are purchased only to improve the aesthetics of the cafeteria or simply for fun, to celebrate holidays, that's not going to be considered an allowable cost. Okay, and we do notice those during allowable cost testing, and we'll ask about them. I think a case can be made for decorations that help convey information, engage the students and families, like a curated holiday-themed bulletin board with food service menu and, recent news about the National School Lunch Program, offer versus serve signage that's been updated for the holidays. I think, decorations at the front of the meal service line that help keep the kids in an organized line. I think anything that serves the purpose of food service can be considered allowable. Okay, but just keep in mind that it does need to come back to whether or not this is actually truly improving the food service program. Okay, and simply saying, oh, it engages the kids because it's fun to be in the cafeteria with decorations. In general, that's not necessarily going to be found to be reasonable or necessary. So that might sound harsh, but it is what it is. Okay, so party favors, incentives, rewards. These are not allowed. They're not an acceptable public relations or advertising costs. So if the SFA is going to offer prizes to encourage enrollment or participation, the cost must come from non-federal sources. An example would be, and this is actually a real example, an SFA purchased 3 iPads that were given away in a raffle from meal applications. This is unallowable because it's not necessary, and a prudent person may find it to be unreasonable. So the CMP list that I linked above here for from the LDOE CMP list, it does mention that an SFA can obtain state agency approval for prizes or incentives for meal applications. So if you are looking to, run an activity like that to improve enrollment, then you're going to want to get state agency approval before you plan that big outreach. Okay. And again, keep in mind, we're talking about like the reasonableness of prizes, right? Like, are iPads a reasonable prize? If you get state agency approval, then okay. But I think if you don't get that state agency approval, then it wouldn't be considered reasonable or necessary. Okay. Okay, so some unallocable examples. 25% of the director of operations salary is charged to food service. Their time spent on the food service program tasks fluctuate significantly. They don't have the time study. They don't really have a personal activity report. They may have some sort of attestation saying that, oh yes, I work 25% for food service, but they're not able to support that with actual tasks or activities or timesheets. In this case, we would call that unallocable. Okay, so 5 cents per plate charged to school food service by the general fund for utilities. This was a very common method in the past. I've seen in Louisiana. If there's no documentation to explain how that rate was determined, then we can't say that it was based on actual usage. Okay, and we can't say that it was based on a reasonable basis because we don't know what the basis was. Okay. Do I have anything else about that one? No, just in general, like if you have a way of calculating a per plate cost for utilities and you have a way to support that, then you may have documentation that can support it as an allowable cost. But in general, no documentation, you just have the calculations showing 5 cents charged per plate. That's going to be found to be an unallowable cost on the basis of it being unallocable and inadequately documented. Okay. My next example would be like 30% of the facility's security systems monthly fees are charged to food service. This is what we call an F&A cost. So to me, it pretty much stands out as being an indirect cost, and it really should not be allocated directly to food service. There's no way to determine exactly how food service is the proportional benefit received by the food service program. I mean, I guess maybe if there's like, if it's based on the number of security cameras, or if it's like personnel-based security, the number of hours that they're spending performing security services for food service. But in terms of just security for the facilities, this is an F&A cost, and it shouldn't really be charged directly to food service. It would be included in the indirect cost pool, which we'll talk about later, and it would be recovered through indirect costs. So land and construction of buildings. Revenues received by the nonprofit school food service shall not be used to purchase land or buildings unless otherwise approved by FNS or to construct buildings. So generally, it's just straight up unallowable. You must receive pre-approval if you're trying to purchase land or construct buildings with food service funds. Facilities repair and improvement. So costs incurred for improvements which add to the permanent value of the buildings and equipment or appreciably prolong their intended life must be treated as capitalized expenditures. And capital expenditures for general purpose equipment, buildings, and land are unallowable as direct charges except with prior written approval of the federal awarding agency or pass-through entity. So we're talking roof repairs, flooring replacement, window replacements, HVAC repairs, building plumbing repairs, elevator repairs. So keep in mind, again, food service does incur some of these costs, right? There's wear and tear on the buildings because food service, is occupying the building. But the issue is that food service does not own the building. It is the general fund that owns the building, and it's their responsibility to upkeep the value of the property. Okay. So it's unallowable unless pre-approved by LDOE. So sometimes there are those rare cases where you can make a case for why food service needs to pitch into one of these costs, but it has to be pre-approved. So an example, like I just kind of, this isn't a real example, just one I thought of, like if flooring needs to be replaced in the kitchen for safety reasons, maybe the building has like really slippery flooring in the kitchen and you need to replace it with non-slip flooring because for some reason mats wouldn't work. LDOE might approve food service funds for like a purpose like this, like a safety reason. In general, the cost should be borne by the general fund. And allowable would be like minor repairs, upkeep, maintenance, keep the property in good condition. So like anything that's just like basic upkeep, that can be borne by the food service program. But anything that is going to appreciably prolong the life of the equipment or the buildings must be treated as capitalized expenditures. Okay, so capitalized expenditures means expenditures to acquire capital assets or expenditures to make additions, improvements, modifications, replacements, rearrangements, reinstallations, renovations, alterations to capital assets that materially increase their value or useful life. So capital expenditures for special purpose equipment. So now we're talking like food service equipment, like walk-in freezers and ovens are allowable as direct costs, provided that items with a unit cost of $5,000 or more have the written prior approval of the federal awarding agency or pass-through entity. So that's LDOE. So what we're talking about here is if the acquisition cost is greater than $5,000 per unit, then you're required to receive pre-approval from LDOE. And if you do not do that, then the cost will be found unallowable, and you may be required to repay food service for the entire cost of that equipment. Okay, and we are talking pre-approval, not retroactive, retroactive approval. We do want to see pre-approval. During an administrative review, we do look at dates. So if we see that the invoice is dated prior to the LDOE approval, then we'll ask questions about that. So just be aware of that. Occasionally, mistakes happen. If you need to request retroactive approval, then you get that from LDOE. It's certainly better to request retroactive approval than to not request approval at all. But the regulations do state pre-approval is required. So acquisition cost means the cost of the asset, including the cost to ready the asset for its intended use. So an acquisition cost for equipment would mean the net invoice price of the equipment, including the cost of modifications, attachments, accessories, auxiliary apparatus used to make it usable for the purpose for which it was acquired. Okay, so taxes, duty, protective and transit insurance, freight, and installation, those may or may not be included in the acquisition cost. This is going to depend on your SFA's regular accounting practices. I will say it is normally included. Like in general, I see the cost of the taxes, the shipping, the installation costs, those are being included in the acquisition cost of the piece of equipment. Okay, so let's say the sticker price is $4,500. So at first glance, you're like, oh, it's under $5,000, don't need state pre-approval. But then let's include the $500 taxes, the $150 freight, the $750 installation, because you have to do some significant modifications to be able to get the equipment installed. Now we're talking the acquisition cost is $5,900, and it is above the $5,000 threshold. Okay, so this equipment would have needed pre-approval from the state agency. And this is the amount that the accountants would have capitalized the equipment in the accounting ledger. And on the fixed asset list, the acquisition cost would say $5,900. Okay, so this is what would be depreciated over the life of the equipment. So per unit depends on how the items are treated on the fixed asset list. So again, if you're purchasing 3 reach-in refrigerators at the same time, each unit costs $2,500, total freight and installation is under $1,000, each unit is under $5,000, and it's not a capitalized expenditure. Okay, so on the district's equipment list, each fridge is separately recorded under a different school site. It's being depreciated separately, so we're treating these as separate units. Okay, but if you purchase 10 cafeteria tables, each table is only $800, but the total invoice is over $8,000. All cafeteria tables are going to the same site. The business office capitalizes this purchase. So your fixed asset list will show cafeteria tables for $8,000. This is a capitalized expenditure. Okay, so even though the per unit, as in like each table costs less than $800, it's being capitalized together. Okay, it's being treated as a single unit, all cafeteria tables. So in 10 years, when you replace those tables, they're all getting replaced. They're kind of being like a set, I guess you could call it. Okay, so this is going to depend on how your business office handles these expenses. Okay, and then keep in mind that the SFA level policies may use a lower capitalization threshold. So just because $5,000 is what the federal government has set does not mean that your SFA is not implemented a lower capitalization threshold. So in your policies and procedures, it should explain what is the capitalization threshold. For a lot of nonprofit organizations, it is $1,000. And that means that if your food service department purchases equipment that is capitalized and it's over $1,000, even though it's under the $5,000, you still need to get LDOE approval for that. Okay. So there's a pre-approval equipment list, okay? And if it's on that list, then you don't need to request approval again from LDOE. Procurement requirements still must be followed. So even if the item is on the pre-approved equipment list, you still have to go through normal procurement processes. And the equipment must be used only for the child nutrition program. So if there's any shared use, so cafeteria tables, they're not on the list, but cafeteria tables, or if you're purchasing, I don't know, a fridge that's also going to be used by like a nonprofit organization on the weekends or something like that, then you need to apply for LDOE pre-approval so they can approve how the cost is going to be split between food service and this other organization that's going to be using the equipment. Keep in mind, I've been using the term equipment, but we're not just talking about equipment, we're talking about capitalized expenditures, okay? So this includes furniture and fixtures, computers, vehicles. Vehicles is a big one. People don't think of that as equipment, but if you are buying a delivery van, absolutely, that is above $5,000 and you must get state pre-approval for it, okay? So here's a screenshot of the pre-approval list, okay? It covers a lot of items. So a lot of the normal food service equipment that you're going to be purchasing, you don't have to request pre-approval from the state because they've already given you pre-approval, okay? But keep in mind, what is not on this list? The big items that pop out to me are vehicles, walk-in freezers, and cafeteria tables. Those are the three that I feel like SFAs get caught on a lot. They think it might be on the pre-approval list or they don't know about the pre-approval list, and they purchase these items without pre-approval. So what do you do in an emergency situation? Okay, an emergency procurement situation. You've got to replace the, I don't know, a delivery van ASAP. Okay, you can reach out to LDOE for expedited approval. You could pay for the equipment out of general funds and then repay food out of food service funds once LDOE approves the cost. So that's the method I would recommend. Okay. But just keep in mind that even though it's an emergency, it doesn't waive this federal requirement to receive pre-approval. And again, pre-approval, not retroactive approval. You really have to be thinking ahead when it comes to these things, okay? Equipment grants. So the USDA equipment grant pre-approval process is already going to kind of cover pre-approval for those equipment purchases. And if you're receiving funding from another source, like a local equipment grant or any local grant basically for food service grants, that's not school food service funds, it's not federal funds. And so technically you don't have to request pre-approval for those items because they're not being paid for out of food service funds, okay? You're transferring money into the food service program from this grant revenue, and that is covering the purchase. But I will say really quick at that one, better safe than sorry. So if something falls through and the funding doesn't get transferred into food service and you've already bought the piece of equipment, it would have been nice if you just already had received pre-approval from the state. So in general, you should just have a system set up that if you're purchasing equipment over $5,000 or over your capitalization threshold, and it's not on the state pre-approval list, just request pre-approval, right? And you can state, where the funding's coming from on the pre-approval list. Okay, so let's move on to bad debt expense. This is a big topic. Okay, bad debts which have been determined to be uncollectible, including losses, whether actual or estimated, arising from uncollectible accounts and other claims are unallowable costs. Okay, the related collection costs and related legal costs arising from such debts after they have been determined to be uncollectible are also unallowable. Okay. So unpaid meal balances become bad debt expense when the account balances are determined to be uncollectible, okay? And if you haven't picked up on it yet, we're talking about student meal balances, right? So if you're a pricing program, hopefully if you're just a pricing program, if you are a non-pricing program and you have unpaid meal balances from a la carte or non-program foods, then that's a pretty serious issue. We're mostly talking here about paid meals that are charged to meal accounts, and then the student's family never pays those negative balances. So district policy must define when balances are determined to be uncollectible. Okay, so is it when a student graduates or disenrolls from the school and you still have a negative meal balance? Is it after 1 year, after 2 years, after 5 years? There's no set policy for this. It's the SFA's decision when the balances become uncollectible, okay? But you have to have a policy, because if we notice that you have unpaid meal balances from years and years and years ago, that is going to be questioned, and it will be determined to become bad debt, okay? So the food service program must be repaid the cost of the uncollectible meal balances from the general fund or from non-federal funds. So food service incurred the cost to make the meals, and the meals were served, therefore the revenue was earned. So I hear a lot, like, an argument to this is that, well, you know, it's just the cost of doing business, right? Like sometimes families just aren't going to pay, and we have to run a program. We have to run a meal program. We understand that means that some students and their families are not going to pay their balances. Okay. The problem is food service isn't a business, right? It's a program, and it's a government run program. And thus there are federal allowable cost requirements. Okay. So it is not an allowable operating loss to the food service program. Okay. It can be for the school, and that's why the general fund has to absorb the debt. Okay. But food service cannot absorb the cost of meals that were served for free, well, served for a charge, and then you never received the payment for those meals. Okay. So when the SFA decides the balance is uncollectible, the SFA must take action. So there needs to be some sort of action taken when that balance is uncollectible. A fund transfer must occur. In-kind transactions are not allowed. So this would be like, oh, well, the general fund pays for some things for the food service program, and so we don't actually have to transfer money because the general fund's supporting the program in other ways. There does need to be a transaction. We need to be able to trace it back to the ledger, showing that food service has accrued the revenue for the unpaid meals that have been determined to be uncollectible. Okay. Charitable donations is perfectly allowable. So a lot of schools will have, like, the PTA will run some sort of fundraiser to collect funds for unpaid meal balances. There's angel funds. If it's a church affiliation, then the church may have a donation fund set up for unpaid meal balances. This is kind of the angel fund concept. Families might donate their positive meal balances at the end of the year instead of requesting a meal refund. So if that is a system that your SFA uses, then keep record of how those funds are being applied. Okay, so the revenues are getting recorded because the money that's being paid by these families that are overpaying into their meal counts are then being shifted over to the students that have unpaid meal balances. Okay, so that's allowed. You just need to keep record of that. And there is a fund transfer there because you are getting the cash. So general funds or other non-federal funds, this would be the most common if there's a lot of bad debt expense, right? And these small charitable donations aren't necessarily going to cover a systemic problem with bad debt. So the district can choose, this is an important concept, the district may choose to continue to try to collect on some of these meal balances. So let's say you've hit this point where the food service department has decided that the meal balances are uncollectible. At that point, the district can choose to send the balances off to, like, a collections agency. At that point, I would suggest, though, that food service has the balances written off. So the general fund transfers funds into the food service fund, resolves the negative balances on the food service side, and then the district can choose to keep trying to collect through the collections agency. Okay, and that's all on the general fund side. Unallowable funding sources would be other federal or restricted funds. So you can't use, like, ESSER funds to cover the cost of bad debt. You can't use non-federal funds that are intended for other purposes. So if you've transferred funds in that you've stated are for paid lunch equity or for free staff meals, you can't then also apply that same fund amount to bad debt expense. Okay. So let's keep in mind meal account software. Like think to yourself, like how do you resolve the uncollectible negative meal account balances that have accrued in a meal account software? Do you just let them increase into infinity and then just never resolve them? Or is there some sort of process that you have for when a student unenrolls and they have a negative balance and you've been trying to collect it for, a year or two? At what point do you need to write it off, and how do you write it off in the meal account software? And then how is that being handled in the accounting ledger? Okay, so as a food service director, you may only have control over what's happening in the meal account software, but you do need to be aware of how the accountant or your business office is handling those write-offs in the accounting ledger. My big point here is that there are essentially ways to hide bad debt expense off the books. So if you're on a cash basis of accounting, then we talked about this on Tuesday, but if the cash never comes in, then you never record the revenue. So it will never actually hit the books. The expense will, because you've already served the meals, you've already purchased the food and paid the salaries to make those meals. But the food service program has never received the cash or the revenue for those meals. Okay, so just making sure that if this is your basis of accounting and you use the cash basis of accounting, when meals are written off in the meal account software as being uncollectible, there needs to be that transfer of funds in the accounting ledger to accrue that missing revenue that should have been accrued. Okay. And again, food service paid for the cost of those meals. They earned the revenue, so that revenue must be recognized for all meals served. Okay, so let's talk briefly about a collections agency. In general, I recommend, like I said, if a balance is being sent to a collections agency from food services perspective, it's kind of already uncollectible, right? Because you've gotten to the point where you now have to send it off to collections, okay? So in general, at this point, that's where I recommend that you then repay food service. And then again, if the general fund wants to take on trying to collect on those balances, then they can, okay? In general, collections agency fees should not be charged to food service. But as the definition that we discussed earlier described, it's at the point that the balance becomes uncollectible, then any fees after that point are unallowable. So there can be an argument made that if your district has a policy of sending unpaid meal balances to collections pretty quickly, like if that's just the process that you have in place, and you think that the balances will be collected by the collections agency, then you could make an argument that some of those fees could be considered allowable. But in general, it's the safest method is to just not charge those fees to food service and to make sure that food service recovers the entire missing revenue, right? So an example would be like $350 is sent to collections. The agency was actually able to collect $350 from the family, but they charge like $150 in fees. Sometimes the fees are pretty high for these, which is why you need to consider, is it reasonable? Is it necessary to the program? Okay. So ultimately food service only sees $200 when really they should have seen $350 from those meal balances. So to me, those are $150 of unallowable costs unless your school policy is established to explain that the meals that are sent off to collections are still considered collectible, and that the fees are considered reasonable and necessary to the food service program. Okay, so if you could defend that, then it's allowable. Bad debt policy. So make sure you have a bad debt policy. I took some screenshots of a very good one. Again, a bad debt policy is not an unpaid meal balance policy. Okay, the unpaid meal balance policy must address bad debt. Okay, so this policy talks about delinquent debt. That's not bad debt yet, right? That's just unpaid meal balances. And then after the delinquent debt has been determined to be uncollectible, then the SFA talks about how they need to reclassify that delinquent debt as bad debt and how they need to make sure that food service is repaid for this operating loss. Okay. So this was a great one. This was just really snippets from their policy. They had many more paragraphs that went into more details about citing the federal regulations and explaining what's allowable, what's not allowable. Okay, so what kind of documentation do you need to be able to provide a meal balance report? We usually look at the end of the school year. We want to see what the negative balances are as of the end of the school year. And if there's any very large balances, then you would be able to explain like, oh, they paid when they came back in the fall, or, oh yes, we're working with this family still actively collecting on all of these balances. So what we're looking for ideally is an aging report. Depending on your system, you may not be able to run this, but an aging report basically shows when the balance was due and then how far past that due date we are now at. Okay, so 1 to 30 days, 30 to 60 days, 60 to 90 days, and then greater than 90 days. Obviously at the 90-day point, that's not that far out for unpaid meal balances, so it may not be considered uncollectible yet, but this is a very useful kind of report for a food service director who's trying to determine like, what kind of bad debt problem do you have? What kind of unpaid meal balance problem do you have? How long is it taking to collect on some of these balances? Okay, and how big are the balances? Okay, so let's talk about non-reimbursable meals. So in general, there's a requirement to track the number of non-reimbursable meals served. So in your point of sale system, in meal count sheets, you are not claiming these for reimbursement, but you still need to track the number served. Okay, you should separate them by category: non-program versus program adult meals, alternate meals, second meals, vended meals, suppers. Again, these are non-reimbursable meals. So when I say alternate meals, I understand that there are alternate meals that can be served that are reimbursable and they can be claimed for reimbursement, okay? But then there are other SFAs that choose to offer non-reimbursable alternate meals to keep the cost of those meals low. They don't have all the meal components necessary to claim for reimbursement. So here I'm talking about non-reimbursable alternate meals, okay? Food service must recover the cost of these meals, period, okay? Whether it's through the payment by the student and their family, payment by the adult, payment by an external organization, or payment by the general fund, okay? Non-reimbursable meals are unallowable costs to the food service program. Now, the food service department is allowed to make these meals, but they must be repaid for them, okay? So adult meals, we're talking program meals served to adults. So these would be the breakfasts and lunches that you serve during the day to the students. You can also serve them or sell them to the adults. For program adults, those are allowable food service costs. So this would be the only exception. Food service employees can eat at the cost of the program, okay? Non-program adults, so any other staff, administrators, visitors, they must pay for the cost of their meal, or if they're not going to pay for the cost of the meal, then someone else has to pay on their behalf. So the general fund must pay for those meals. That's what I just described. And there can be a combination. So you can underprice staff meals as a staff benefit. That's great, but the general fund has to pay for the underpriced adult meals, okay? Food service can't absorb the cost of underpriced meals. There may be other meals prepared and served to adults. Treat these as catering or vended meals. So if there's like suppers served to adults for some reason, I don't know, like usually this is like a staff meeting or something like that, that food service prepares meals that are outside of normal meal service for adults. Treat those as catering and vended meals, invoice the receiving department or organization and get repaid for those meals, okay? So this applies to non-reimbursable student meals as well. So second meals, vended meals, and then any other meals that aren't like the same as the reimbursable meals. So any other vended meals, suppers. If you're a residential care facility, suppers is a big one. Non-reimbursable snacks. Alternate meals, again, if they're not reimbursable, alternate meals need to be repaid to food service. So you can price them at cost and the students pay for those meals. Keep in mind, at cost can be at cost, okay? So like an alternate meal costs less to make, so you can charge less for that alternate meal, okay? You just need to be able to prove that was a management decision, right? If you offer them for free, food service must be repaid at cost. So at cost must cover the overall cost of the meal, food, labor, supplies, any other overhead costs. If you have a food service management company, keep in mind that that fixed rate fee may not be at cost, because if you have other costs that are incurred by your program, if you charge utilities, if you charge anything else to food service, these non-reimbursable meals also need to consider the cost of those extra items, okay, beyond the food service management company contract fixed rate. So in-house labor needs to be considered. If you're self-prep, you got the LDOE average meal cost worksheet. And if you have a food service management company, you should also be using the LDOE average meal cost worksheet. Calculates at cost for you. So if it's done correctly, then you know what your at cost is for your average breakfast and average lunch. Okay. And then making sure that you're aware of FNS instruction 7825, which discusses meal pricing requirements for adult meals. But in general, if you have that at-cost meal, then you know what you need to price your adult meals at. RCCIs. So there's a worksheet for RCCIs that help residential care facilities break up the cost of reimbursable meals versus non-reimbursable meals. So suppers make up a big part of an RCCI's operations. A lot of times it's difficult. You can't like make separate purchases for suppers. Usually it's the same food that you're purchasing to make the reimbursable meals. You're also using to create these non-reimbursable suppers. So there's a worksheet that kind of helps an SFA in this position determine what % of their food costs and their labor costs and their other costs are going towards reimbursable meals versus non-reimbursable suppers, non-reimbursable snacks. Okay, and this is based solely on meal equivalents. So a supper is a meal equivalent, just like a lunch is a meal equivalent. And a breakfast is usually considered 2/3 meal equivalents, and a snack is considered 1/3 meal equivalent. So this worksheet, if it applies to you, look through this worksheet. Just make sure that you've given it thought. You don't just fill it out. You actually understand how it's calculating, and make sure it's the right calculations for your operations. Okay. So keep in mind, state agency pre-approval. Under any given federal award, the reasonableness and allocability of certain items of cost may be difficult to determine. The non-federal entity may seek the prior written approval of the cognizant agency, which is LDOE in most cases, in advance of the incurrence of special or unusual costs. So if you think that you have a unique situation and you want to get pre-approval for that cost, then you can do that. Okay. But again, pre-approval. Don't ask for forgiveness later. You want to ask for pre-approval. Okay, rent expense. So rental costs are allowable to the extent that the rates are reasonable. There's a bunch of different explanations on what makes it reasonable. But in general, we're looking at third-party arm's length transaction. So it's with an external party. Okay, documented rental agreement. You need to have a copy of the rental agreement, and it's been signed by the SFA and it's been signed by the third party, and it has the terms of the agreement. And if it's like a school rental agreement, food services portion is allocated appropriately. So this could be like square footage percentage of space used only for food service. Okay, so do not charge any shared spaces to food service. It has to be solely for food service occupancy. Okay. So unallowable rent. This is a big issue this year and the last couple of years. Property that is owned by the school district or the SFA, you cannot charge your own food service department rent. Okay. Property owned by a related party. We'll talk about related party in just a minute. Rent, you cannot charge a rent from a related party to the food service program. Okay. Now the school can be charged rent from the related party, but you cannot pass those costs down to a federal award like the school food service program. Okay. The exception is that we're talking about rent. Okay. Technically, rent is restricted to occupancy costs in these cases. We'll talk about that in a second, but you can't just take the rental agreement, split it up by square footage, and charge that to food service. If the rental agreement is within the SFA, so the property is owned by the school district, or if the property is owned by a related party. Okay. Rent when food service occupancy can't be readily determined. So again, if there's shared space issues, if the kitchen is used by other programs, then you probably cannot charge rent to food service. There might be some ways to get around this if it's a big cost and you really need to find a way to charge these kinds of costs to food service. But in general, if you can't readily determine food service occupancy space, then you can't charge it to food service. Okay. And this is applicable even if food service is getting a good deal. So I know this stinks, but food service is getting charged under what they would be charged if they went out into the community, had to rent their own building and everything. We get that, but unfortunately the federal regulations, this still applies. Okay. So less than arm's length transactions, when one party to the lease agreement is able to control or substantially influence the actions of others. Okay. In these cases, the rent expense is only allowable up to the amount that would be allowed if the SFA owned the property. So depreciation, maintenance, taxes, insurance, these are called occupancy costs. And it only applies to rent expense charged to the federal award. So again, the school is welcome to pay rent to a related party on whatever basis they determine to be reasonable, but food service can only be charged their portion of the occupancy costs. Okay? And it can't exceed the rental amount. That's the other thing too. Related parties, we're talking divisions of the non-federal entity. So this again would be the SFA charging their own food service department. Or if you are like a charter organization and there's a related nonprofit, and if the financials are consolidated, like we look at an audit report, and if the audit report shows that there are related parties, then it's a related party, right? You shouldn't be charging the rent between those two related parties to the food service program. Okay, so the audit report is where we go to identify whether there's related parties. Directors, trustees, officers, key employees, or the family members of those, either directly or through corporations or trusts. Okay, so some of this can be hidden. You need to be aware of the transactions that you're engaging with and that food service is paying for. Okay? And then this isn't like limited, right? Like to just the director, the trustees, the officers, anyone that meets the definition of control or substantial influence. So we can see this potentially with the charter management company and their related parties. Even if there's an independent school board, if the day-to-day operations of a lot of authority falls on a consultant or a charter management company, then there can be an argument made for control or substantial influence. Okay, and so that will create a related party transaction. Occupancy costs. So the lessor could run an annual expense report showing all of those depreciation and maintenance and repairs and all of that. And then food service can be charged up to their portion of the occupancy cost. So again, that would be square footage based on space used only by food service. Again, consistency, don't single out food service. If food service is going to get charged occupancy costs or rent, then that needs to be charged to other federal awards and other programs as well. I don't think I have time to go over this example. I think it's pretty straightforward. Okay. You will have access to these slides if you want to look through my calculations. Okay, utility expenses can be charged as direct costs if the actual usage can be readily determined. So separate utility meters for the kitchen. If you want to get into the manufacturer's energy consumption data and figure out exactly how much it costs you to run your refrigerators or the oven, go for it. Okay, if you have the documentation, then do it if it's readily determined. Okay. Or if the cost can be prorated using a base that accurately measures the benefits provided. Okay, so the base must be established using reasonable criteria and supported by current data. Okay, so an example would be square footage percentage for electricity. Okay, square footage is a pretty good cost driver for electricity. Okay, the amount of space that a program occupies within a building does directly correlate with its electricity consumption. Okay, it's not perfect. Food service probably incurs more electricity per square foot than other programs because of the appliances, but square footage is a reasonable cost driver. Okay, and then keep in mind that the utilities must be charged consistently, again, across the whole SFA. So cost drivers, does it accurately measure the benefit? So is square footage actually correlated with water usage? Not really, right? Trash disposal consumption? Not really. Telephone bills? Certainly not. Internet? Not really. So you can't just use square footage for everything. You do have to make an argument, a case that square footage is a good cost driver. And if there's other cost drivers that are better, then you should use those. So telephone would be like the number of lines available. Maybe food service uses one of them compared to a total number of lines for the school. Trash, we're talking dumpsters. If food service has their own dumpster, then they should just get charged for that dumpster, that percent. Okay. There can be some cases, I've seen some unique and good explanations for things like, you know, the school would only need the dumpsters to be collected once a week by waste management, but because of food service and the amount of trash that is created by the food service program, the waste management company now has to come twice a week. Okay. And so they charge 50% to food service because it's the additional pickup per week. That's logical. I think it is based on food services consumption and the cost that is incurred by food service. Okay, so just keep in mind that USDA identifies utilities as a common indirect cost per the USDA indirect cost rate agreement. So the guidance says utilities should be charged directly only if there's a methodology to quantify exactly how much energy was utilized. So the examples I just gave with square footage, to be honest, that doesn't really meet this requirement. So just keep in mind that this guidance may change over time. So you need to be aware of any update in LDOE policies. Currently, square footage is allowed for certain expenses. You can use cost drivers for certain expenses. But in general, USDA treats utilities as an indirect cost. Okay, payroll. I'm running out of time, but we've got a lot. I'm just going to keep plowing through. So payroll expenses must be based on records that accurately reflect the work performed. So time and attendance reporting systems are required. Okay, so internal controls need to provide for the reasonable assurance that charges are accurate, allowable, and properly allocated. Time and attendance systems must account for 100% of the employee's activity. Okay, so you can't just say the bookkeeper worked for 3 hours on food service. You also need to know that she worked for 30 hours total for that week. So you can take the 3 hours and divide it into her 30 hours total. It must support the distribution among specific cost objectives, so food service and other programs. Keep in mind the Department of Labor and payroll laws. Okay, so Fair Labor Standards Acts require that an SFA keeps documentation indicating the number of hours worked each day for non-exempt employees. Almost all food service employees are going to be non-exempt. Okay, so you need to have daily hours worked for employees. This has to do with overtime laws. Okay, so employees who work directly for food service, but also work for another department, let's say a cook who also works as a bus driver after school, their employee agreement should reflect compensation for both roles, right? So I should be able to look at documentation that supports compensation paid for both roles. And that should be supported by their time and attendance reporting system. So if they're paid hourly, then they should have hours set aside for cook hours and hours set aside for bus driver daily. It's been signed by the employee. It has been signed by a supervisor. There is documentation to support it. Employees who provide support activities for multiple departments, we're talking clerical and accounting, they need documentation to support actual effort spent on school food service. So time sheets, time studies, okay? Can't just use estimates. You need to be able to identify the tasks performed. So a secretary can't just say, oh, I work like 2 hours on general food service tasks per day. They need to be able to explain what tasks were performed. Keep in mind that LDOE requests that you're required to fill out a labor expense report that states which wages and salaries are paid out of school food service funds and which wages are paid out of other funds. So if this is inconsistent with what is happening in your ledger, if we see that you said in the labor and expense report that it is not coming out of school food service funds for like the accountant's salary, but in your ledger, it's being coded to a food service expense code, then your documentation does not support your ledger as an allowable cost. Okay, so keep in mind what you are reporting to the state needs to be accurate. There's a semi-annual certification for federally funded staff where an employee has to attest that they spent 100% of their time on the National School Lunch Program or the food service program. Don't attest to 100% if your time is split, right? Like if an employee works for another department, then they must explain that in this attestation. Okay, it needs to be supported. So if we get an attestation that says that 100% of their time was spent on food service, and then we see that they actually spent some time working on another department, then that is going to cause issues. Okay, and in terms of how the cost was allocated for their payroll. Okay, so administrative salaries, I don't want to get into this too much, but let's just talk about these as general F&A costs. F&A is facilities and administrative, we're talking superintendent, finance director, director of operations. If their direct efforts can't be calculated, then the costs, if they can be calculated, then the cost could be directly allocated to food service. But in general, these are indirect costs. Documentation of time and effort. And we will notice these. These are the costs that get questioned during an administrative review. Our eyes will go directly to a finance director, to a director of operations, because we know their primary role is not food service. Okay. Double dipping and consistency. So making sure that costs that are included in the indirect cost pool are not also getting charged directly to food service. They would be recovered through indirect costs. So an example, let's say food service is understaffed. The director of operations is stepping in to help receive daily deliveries, ordering meals, supervising whatever needs to be done. We understand that is an extra duty and food service is incurring that cost. And so if their director of operations can document their time and effort for several weeks and show that they are spending 2 hours out of a 10-hour day on school food service activities, then by all means, 1/5 of the salary can go to food service. So long as that routine continues, the moment the director of operations is no longer assisting as much with food service, then you have to do a new work activity, or you have to do a new time study to support the activities, okay? So just be very careful about these things, okay? These can get you into trouble during an administrative review. Okay, direct versus indirect. Direct is specifically identified with a particular cost objective, food service. Okay? It can be directly assigned to activities with a high degree of accuracy. Okay, so this is again where square footage can become a problem, because how accurate is square footage in allocating costs? Okay. Indirect costs are incurred for a common or joint purpose. They benefit more than one cost objective, and they cannot be readily identified with a particular final cost objective without effort disproportionate to the results achieved. So if you are having to bend over backwards and spend hours trying to figure out exactly how many hours your secretary works for food service, it's not worth it, right? It needs to be recovered as an indirect cost, not a direct cost. Okay. And then the other definition of an indirect cost would be after all costs have been assigned as direct costs, anything that's left over is indirect, right? Okay. So examples of direct costs, we're talking compensation and fringe benefits of food service employees, costs of materials and other items, food supplies, food service equipment, and depreciation. Administrative and clerical when it's integral to food service and can be specifically identified with food service, and you budgeted it for food service. Okay. Travel costs for food service. Indirect, administrative and clerical staff, facilities like depreciation expense, equipment and capital improvement, loan interest on buildings, operations and maintenance expenses. So keep in mind, it's the depreciation on the building, right? Versus the direct cost would be depreciation on food service equipment. Yeah. Personnel and HR costs, that's indirect. Takeaways, there's no universal rule for classifying certain costs as indirect or direct under every accounting system. So there are judgment calls that need to be made. Look at how the costs are classified in the ledger. Function codes affect whether the cost will be classified as indirect or direct cost pool when an indirect cost rate agreement is established. Compare those function codes to the LDOE schedule of expenditures, which I will show in just a second. And then there is a Louisiana Department of Education indirect cost rate plan. I couldn't link it because the website was down, but if you just Google that, you can find that on the Louisiana website, and it just explains indirect costs better. So after this training, if you want to charge indirect costs to the food service program, or your school wants to charge indirect costs to the food service program, do your research before those costs are charged. Okay, so here is an example of, this is the schedule of expenditures for Louisiana Department of Education. It lists out function codes, it lists out description, and then there's two columns, restricted code and unrestricted. So if you're charging the unrestricted rate to food service, these codes tell you whether or not you need to exclude the cost or whether they're treated as indirect or direct. So D is a direct cost, I is an indirect cost. Okay, this is probably beyond the food service director level. This is something that your business staff needs to be aware of. Okay, so mostly this should just be passing the slides off to your business staff, saying make sure that this is handled correctly, and they should be able to explain it to you. But it's not necessarily something that as a food service director you should have to wade through yourself. Okay, this is very accounting heavy. Okay, this should not take long. So indirect costs are charged using an indirect cost rate multiplied by a modified direct cost base, period. Okay. All right. These are indirect costs. Indirect costs are not saying we charge 25% of the administrator's salary because they spend 25% of their time on food service, or square footage is applied to charge utilities. Those are direct costs, not indirect costs. Okay. Indirect cost rates are assigned by the cognizant agency, which is normally LDOE's Division of Ed Finance. Okay. And the calculations are based on your AFR. Unrestricted and restricted rates are calculated. Unrestricted is allowed for food service because NSLP is not subject to supplement, not supplant. That doesn't make sense to you. Doesn't matter. Use the unrestricted rate if that works out for your SFA. Okay. Indirect costs are recouped by the general fund. The funds actually have to be recouped from the food service program to the general fund. Okay. If they're just calculated and then nothing's ever recorded in the ledger, then there were no indirect costs actually charged. Okay, so again, this is a cost that needs to be adequately documented, needs to be in the ledger as a food service expense showing indirect costs charged to food service. And it's usually recorded indirect cost expense in the ledger. It's not usually broken up by utilities, administrative salaries, blah, blah, blah. It's just one line, indirect costs in the accounting ledger. And there's usually an interfund transfer because it's money being moved from the food service fund into the general fund. An SFA can always choose to undercharge for indirect costs. You just need to make sure that you've documented that that difference is going to be forgiven to the food service program. Okay. And I linked the USDA indirect cost guidance. Read this before your food service program is charged for indirect costs. Here's an example of what an indirect cost rate agreement looks like. You've got the indirect cost rate. That is the rate that will be applied to the modified direct cost base. So in this case, it's 8.1252%. Charter schools, if you're a charter school, if you individually submit an AFR to LDOE, you will receive an indirect cost rate based on your AFR, okay? If your rate is below the charter school average, then you'll be given the charter school average instead of the lower rate. And this applies to type 1 independent, type 2, type 3 independent, and type 5 charter schools. Okay, so charter schools that fall within a jurisdiction of a school district are eligible to use that school district's indirect cost rate. So that's type 1, type 3, and type 4. Okay. Modified direct cost base. It's total food service expenses minus distorting items. Okay, so distorting items are capitalized expenditures and equipment, food costs, payments to contractors beyond the first $25,000. This is the food service management company. Okay, so if you pay more than $25,000 to your food service management company, you can only include $25,000 in your modified direct cost base. Anything above that needs to be removed. Okay. The reason behind this is because USDA has said that the cost of procuring a contract is basically the same. So any of those indirect costs are the same for a contract, whether it's $25,000 or $250,000 or $2 million. Okay. And so they say you can only include up to that first 25,000. That is explained in the USDA indirect cost guidance that I linked earlier. So if you have more questions about that, you can see what USDA has to say about that. If you're charging indirect costs monthly or quarterly, don't forget that you don't want to include the indirect costs that you've already charged to food service throughout the year in the modified direct cost base. I saw an SFA do that this year. So they were charging indirect costs to their indirect costs. Yeah. Hopefully that makes sense, but just be very careful about this calculation. This is where SFAs make mistakes. Okay, so indirect cost rate, let's say, is 14.23%. $10,000 food service wages and benefits, $8,500 food expenses, $1,500 non-food supplies, $6,000 in equipment, $23,000 total. Then you need to take out food expense, take out equipment. You got your modified direct cost base, and you can calculate allowable indirect costs. So if this is too quick, look back at this presentation and look through these calculations to understand how that was calculated. In this case, the SFA recouped $1,500, and the school board agreed to not recoup the remaining.
It's 2.
Make sure you retain the expense report, the indirect cost rate agreement, all your calculations, and the decision to not recoup the full amount. Okay, so if you have a food service management company, then you need to make sure that you only include the first $25,000. So you need to exclude the amount of the contract over $25,000. Same documentation you need to keep. Don't double dip. So don't charge costs directly and indirectly. Here would be an example of that.
It had your name on it and her name, so I'm assuming maybe it was from the.
And then we got the de minimis rate. So if you do not have an indirect cost rate agreement and you have never been given an indirect cost rate, then you can charge 10% as the indirect cost rate. It's applied the exact same way as I explained before with indirect costs. So here's some just overview conclusion information. Is it reasonable, necessary, allocable, adequately documented, legal, compliant, consistently treated? Is it explicitly prohibited? If the cost is for equipment, was it pre-approved? These are just kind of things that you need to be thinking about as a food service director in determining if costs were allowable. How can you ensure only allowable costs are charged? Request and review detailed expense reports. So you need to make sure that you are receiving expense reports from the business office to make sure you understand what expenses are being charged to the school food service program. Focus on any year-end entries or general adjusting entries that are made around June 30th. Those are expense reclasses, and you're going to want to know what those are for. Okay. Ensure payroll expenses are supported with time and attendance reports, that the supervisor and the employee has signed the timesheets with daily hours totaled. Payroll expenses are documented for non-food service department employees. So again, any of those administrative or clerical salaries. And don't accept cost allocation methods that aren't a reflection of proportional benefit. So estimates are not acceptable even if they're favorable to the program. If indirect costs are charged, making sure that you understand how those costs were calculated. So you have documentation of the calculations and you understand, you confirm they removed food, equipment, and any contracts over that first $25,000. Retain all documentation for at least 3 years. And strengthen your internal controls. Keep written procedures up to date and monitor those controls. As a food service director, you should be aware, you should be monitoring actively all of your policies and procedures for ensuring only allowable costs are charged to food service. Okay. All right. 15 minutes over. If you have any questions, please drop them in the chat. I'd be happy to answer them in an FAQ after the fact. I hope that covered all of your questions that you might have on allowable costs, but like I said, I understand there are a lot of very specific circumstances, so feel free to drop your questions in the chat. Thank you for attending. I hope you guys learned something today.